Everyone, welcome to today's live session. Today is all about getting qualified to buy a home. So whether you are a new business owner or someone that has been in business a long time, but you may not have gone through the home buying process since you've been a business owner, or you're going to get ready to refinance or something like that, I have some information for you, how you can get qualified, what information you need to have in place, and also to get the best interest rate. Hi, Anne-Marie. Before I go into this, I also wanted to let you know that I still have spaces left in my consultant financial bootcamp that is starting on September 4th. So if you're looking to, get clarity around your business finances, understand how everything works, and also to save money on your taxes and implement some long-term financial strategy, then this is a program for you. So it's a 4-week program, and you may be working with someone like an accountant or something, but you may still have a lot of questions. You may still not understand how things work, and the best way how you can maximize deductions and get the most cash flow from your business is to understand how things work. So if you just working with someone else that does the day-to-day, do your tax filings and so forth, and you just want to come to understand how things work, understand some of the strategies that you can implement so that you can take those back to your provider, then you will also benefit from this program as well. So whatever questions that you have, you can come to the program ready to ask. It's fully loaded, have a pretty holistic business financial management program that you will definitely benefit from. So hi Deborah, how are you? Thanks for joining. So as I said, today is all about, so send me a message if you have any questions, and I'll be happy to discuss that with you in a message, and then get you signed up if you're ready for long-term financial strategies and also any strategies to lower your taxes this year and going forward. Mortgage, getting qualified for a mortgage, being in business, sometimes it can be a hassle. I've just went through this process. It was it was a long, tedious, stressful process for different reasons, and I can give you some more information on what are some of the things that you can avoid so that you can make this process much easier for yourself, and also that you can get your tax return and so forth ready so that you are able to qualify for the amount of mortgage that you can afford and also get a good interest rate. So this is for anyone that, if it's your first time either purchasing a home, or if it's your first time purchasing a home as a business owner, works completely differently when you don't have a W-2 anymore. If you're purchasing a home as a business owner, or you're getting refinance, some of the things to think about is, first, let me go ahead and apologize to anyone in the mortgage industry that's gonna watch this video. Completely apologize to any mortgage officers and something. I'm talking about their underwriting process and the mortgage company itself. So this is not for anything against the mortgage officers that you use for the pre-qualification. So pretty much one of the things that you have to know is that the entire mortgage underwriting process, it's ridiculous. It works completely in opposite to how a business operates, how you pay yourself as a business owner, and just being able, and how you file a tax return as a business owner, getting certain write-offs and so forth. The mortgage underwriting process, they don't understand this, they don't get it. Their rules and their procedures that they follow, they're just ancient, they're old, and they're just not in compliance with today's world, how today business owners' tax returns are filed. I'm not even sure what era those mortgage rules and so forth come from. So as I said, I apologize to any mortgage person that's on here that this is completely not against you, but you guys' rules just need to get updated and need to get up to the time to what's going on so that business owners like myself can have a much easier process getting qualified. So one of the things that you have to do is to keep how much you're paying yourself a little more consistent if you're able to. So if you're planning to buy a home towards the end of this year or sometimes in 2019, if it's in 2019 and you have more time to prepare for this, then keep how much you're transferring from your business account to your personal account a little more consistent. When they see large deposit, they get all confused. They ask for way too much documentation, and they just want to start digging, and it just causes more frustration on your end. They're want to take a look at your business information and all that. It just causes way more stress than it needs to. So keep how much you're paying yourself, how much you're transferring from your business account to your personal account a little more consistent, because they just like to check boxes and to see consistency, so that you can move that process along much further, and so that it does not hold up your underwriting process or your pre-qualification. Pretty much at this point, you'd have already gone through pre-qualification. So during the underwriting process, for them to be able to close on your loan. So keep that consistent, else you're gonna have to provide way too much documentation. They're gonna get, they're gonna want so much information about, how much, you're getting paid from your customers and your clients, and it's just get a little messy at this point. Then you send them information, they don't understand the information, they can't believe that people are paying you that much money, and it's just, so they just want to figure out what the heck is going on. Is someone trying to, give you money, or, is someone doing something illegal, or I'm not sure what they're trying to find out, but they just get confused and they don't understand. The second thing is, if you have investment income, to also have documentation to say where this investment income is coming from. So if you are in trading and selling, stocks and so forth, to have, the documentation from your trading company to make sure that they can see where it's coming from. If you're selling, if you have investment properties and those got sold, then you'll have to make sure that you have your closing documents ready to provide, because they're going to dig deep into those to make sure that, if you're having this amount of investment income, and if you don't have it next year going forward, that they want to make sure that that also is consistent and it's going to carry over from year to year. So you want to have the documentation to prove that as well. Hi, Deidre, how are you? Thanks for tuning in. And the next thing is to look at your credit earlier on in the process. If you're just thinking and entertaining the idea of going to buy a home, start looking at your credit. Take a look. You can also have the mortgage personals pull your credit to get you pre-qualified to look at your credit. If you have credit cards that maybe have different limits, that you want to start paying down some of those cards. And the reason is that you want to go ahead and lower your credit utilization so that you're going to get access to the best interest rate. So yesterday I talked a little bit about, credit and how you can improve your credit, or to get a better understanding of your credit so that you can have, a higher score or benefit much more from your credit. And utilization is a big thing in credit. And what this means is how much available credit you have versus the amount of credit that you're using. So if your available credit is, say, $10,000, because you $10,000 and you're at $9,000, then at that point, when they pull your credit, you're going to get pitched a higher interest rate. Interest rates are pretty much low for the past 5, 6, 7, 8 years, but you want to also make sure that you're getting the most favorable rate in that market, since you're going to be stuck with this mortgage for a very long time. So make sure that your credit utilization is low at the time that they're going to pull your credit to get you pre-qualified, and when you're going to go find a home and go through the underwriting process, that you want to pay down those cards to reduce your utilization rate. Yes, most people are not prepared to buy a home. You are right. Are you a realtor? You know more about their preparation than I do if you're a realtor, Deidre. The next thing is your tax return. if you're planning to buy a home, do not file your tax return until you get pre-qualified. And I'm going to say that if you're planning to buy a home, do not file your tax return until you get pre-qualified. And the reason is because once you file and report everything on your tax return and you're trying to get qualified, hi David, the problem is you are going to, whatever is reported on your tax return is going to affect you. And here's the thing, underwriters don't care if you have a whole bunch of cash laying around. They don't care how much, and that's why I said that how the credit approval or the mortgage approval process, it just completely works outside of common sense when you think about it, or you're gonna think it's just completely ridiculous. Even if you have a lot of cash laying around and your tax return is showing a lower income or something that based on what you are saying that you earn, it's gonna be hard for you to qualify. Business deductions such as your business use of car, business use of home, depreciation, and all those items on your tax return that you may not spend money on, but you can get a legitimate business deduction. These mortgage officers don't understand how it works. Even sometimes when you sit down and explain to them, as a CPA, as an accountant, like, I'm going fist to fist with them because I'm like, you guys don't get this? This happens to most business. You're telling me that you guys don't get this, and this is completely ridiculous. And I have clients that comes and complain to me all the time about them not understanding. So you need to make sure that you get pre-qualified, sit down, talk to your mortgage officer before you file your tax return. Because if your goal is to get into that home, I know that rent is pretty expensive right now, so you can save a lot of cash now being able to buy a home, since the rent is so expensive. So if that's your goal, then you have to really weigh the cost benefit of some of the deductions that you're taking. And also, I do have a little trick, but I'm not sure if I can say it on video. So send me a message regarding the tax return part and I'll be happy to answer. But anyways, what you're gonna do is to make sure that you do basically a draft version of your return. Ask your accountant to send you a draft version of your return before you file it, and send it to the mortgage officer. This is what everything is, blah 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 blah. Income, expenses, this is how much I paid myself, all of that, and make sure that everything is in line with their underwriting process and which mortgage company that they're going to send your file to make sure that all your ducks will be in a row by time you're able to sign that real estate contract and go through underwriting. And at that time you will have to submit your tax return to file. So I'll say put your tax return on hold until your mortgage person is able to review it. You can make changes accordingly, and these are not doing anything illegal or any illegal changes that you're going to make. Sometimes you may have to pull back on some of your mileage and so forth deductions, and these are deductions that you don't spend cash on. So that's why you have to sometimes look at it. Is it better for me to buy the house this year, or should I push it next year based on some of the deduction and write-off that I have this year, so that I'll be able to get a lower tax rate this year, but I will be able to report a higher income next year and be able to qualify for that, dream house, or that, that new home that you want, or qualify for that lower interest rate when you're financing. The next thing is, if you're filing your business return as an S corporation, then you're going to have a lot more explanation to do when the numbers are not coming back the way you think. That you're thinking that, hey, I made certain amount, why is this mortgage person saying that the amount I made is lower? It's because if you don't have a payroll stub to give to them, you have to give them if you're on payroll as an S corporation, you're going to have to give them a copy of your payroll stub, as well as kind of like a pro forma financial statement. And what that means is just basically a quick and dirty, these are all my income, these are all my expenses, this is how much is in my business bank account, this is how much debt my business has, and this is the difference between the two. So they're going to ask for a pro forma business report from you. And what you can do is, if you're on payroll and you're an S corporation and you're filing your taxes as an S corporation, give them the pay stub or last year's W-2 and give them the pro forma. If you're not on payroll and your bookkeeper is deducting your salary, then you want to go in there and have your bookkeeper remove the deduction for your salary before you submit the pro forma income statement, because mortgage officers, they don't know how S corporation 1065 works. They only know how Schedule C filers work, and they don't even completely understand some of the deductions on there, so that's why they give you such a hard time. So you want to make sure that you look how your bookkeeper is reporting how much you're paying yourself. Hi George, thanks for joining. And the next thing is shop around for different mortgage brokers and so forth, people who understand and have dealt with a lot of business owners in the past, so that it's not going to be as frustrating for you. It's not going to be as hassling for you, so that it can be quick and easy. They understand the ins and outs of how you're paying yourself and so forth. And once you follow these simple steps, then it should be a breeze for you to get pre-qualified, get yourself in a home without have to pulling your hair out, or something like that. So that's it for today. Hopefully this information is helpful on getting you thinking about, if you're gonna buy a home, what are some of the things that you have to have in place. And as I said, my Consultants Financial Bootcamp still has seats available. It starts on September 4th, right after the holiday, right after Labor Day holiday. So it's just in time for you to get ready for year end and get ready, for Q3 and year end, and start getting your business financial life ready for before tax filing season starts, as well as before 2018 start, when you start to reset your goals and get some more financial information. So if you're looking forward to reducing taxes, implementing long-term financial strategy, if you're working with a provider and just have a lot of questions because you don't understand how things work, you want to get a better management around your business financial life, then this program is for you. The way to sign up is to send me a message. I want to make sure that you are that you are fit for the program. So once you send me a message, then we will be able to communicate. But anyways, send me a message if you have for this program. And thank you for watching. Have a good day.